Welcome to Nilesh Shah for a show which is called Market Makers. This is the second edition which I am doing. I am on the other side for a change. Normally, I am on that side of the table. So I've been enjoying it, and Nilesh. But I must do a little bit of introduction before we start, because that's what BasisPoint is. So BasisPoint as a platform intended to have this show, Market Makers, targeted at market professionals, mutual fund managers, asset managers, investors, traders, and so on. So some degree of fairly significant knowledge was is expected, and hence we have movers and shakers of the market like you on the show. It was also felt that on the other side there should be someone who knows about markets. Hence, I am sitting where I am, in a new avatar, so to say. So that's briefly about the show. And also, I don't know who is there left in this country who needs an introduction to Nilesh, but I must. So I will be very brief. Nilesh is a member of the Prime Minister's Economic Advisory Council, and of course, he is MD and CEO at Kotak Mutual Fund, one of the largest mutual funds, one of the most successful ones, even personally speaking, uh, in the country. And of course, he's a really old friend who I rate very highly, dear friend. So thanks, Nilesh, again for coming on.
Thank
And
you, Manoj, for having me here.
let's dive into the questions. So, I'm going to do a slight departure from the usual questions you face, because if I start with equities, you can talk about equities in your sleep, and I will put you to sleep. So let's start about where we cut our teeth together, which is the fixed
Yes.
income markets. Interest rates. Not too many people may know, right, Nilesh? But the point is that that's our place of origin. Of course, Nilesh's as well as mine. So it's a market which is very dear to our hearts, and we've spent endless amount of time, hours, days, months trying to see how we can get the market to develop more. But on that issue, starting with something very topical, is that we've seen the new governor deliver rapidly several interest rate cuts. And we're down by about 100 basis points in the last 6 months as far as repo rate is concerned. Of course, it unsettled some of the market because with the rapidity at which the cuts were delivered, and also the change of stance to neutral, meant that the curve in the immediate aftermath, the interest rate curve steepened, and people were a little worried, particularly market players, that what does this entail for markets. So given this, and now some semblance of stability has come. The curve is not as steep anymore. What's your view on interest rates going forward, Nilesh?
So, one, Manoj Bhai, I believe post Operation Sindoor, a message of pro growth has gone across the ecosystem. Today, India is 11 times bigger than Pakistan. There are countries who decide to support Pakistan. If we become 20 times bigger than Pakistan, even those countries may have to think twice. And in that context of pro growth, we have to now visualize policies. RBI begin with liquidity going all the way up to next calendar year, if not next financial year, gave jumbo rate cut of 50 basis point. Yes, in a cautious mode, they changed the stance. But immediately after realizing that it is spooking market, they provided balm by saying that we will be data driven. SEBI, on the other hand, is also taking several proactive support. RBI also relaxed gold financing guideline, infrastructure financing provisions. So net, we are looking at a pro-growth mindset. Obviously, it doesn't mean that we will ignore inflation, but there will be pro-growth mindset either through liquidity enhancement or through interest rate cut or through other provisional steps. Keeping that background in mind, my belief is that there is still one or two policy rate cuts. There is adequate to ample liquidity ahead. And all these things could mean that the yield curve could come down at both short and the long end. And the only reason which kind of provides floor to our yield curve is what is happening in US market. Well, we have seen days where 10-year yield was 495 and 10-year US yield was 4.5. Compared to those days, 45 basis point, even today the spreads are fairly attractive. So I will put my money on one or two policy rate cut and downward movement in yield curve, both at the short, medium, and long end.
Okay. Just one step back and the big picture. Uh, Considering that inflation at the bottom of RBI's expectation is 4%, and you have a real interest rate expectation of, let's say, 1.2 or so. Uh, you know, li- in your opinion, again, what our country at our current stage of economic growth needs inflation, right? We need inflation. We don't need deflation for sure, but even inflation we need at a certain level. So, from that angle, again, which is big picture, it would be good from a market point of view to foresee further interest rate cuts. But do you think over the long term, what should be a healthy, is 5.5 should be is a healthy policy long term kind of rate? Or do you think, from stage of economic growth, should it be lower? Just as a economic kind of comment.
So, Manoj bhai, we have to present the right inflation. Today, in the CPI basket, food is almost half of the basket. But if we go by household survey of expenditure conducted by RBI, food is about 35-40%. Now, food inflation is running higher than core inflation. If you give that 10% extra weightage, you are overstating your food overall inflation by 40-50 basis point. Second, in Western world, they adjust inflation for feature increase, productivity increase. अपने उधर black and white TV and color TV is treated at the same level.
Same level.
So first, we must improve our method of measuring inflation. It should reflect today's India spending pattern, and then we have to figure out what inflation is appropriate. Is 4% cast in stone? Answer is no. Eventually, we should be looking to bring it down further in line with what a developed nation would like to deliver.
And this is a very good point you made about whether the basket itself is representative or not. I recollect, and you will as well as a old timer. You remember these Kodak photo films are also used to be there in the
Yes.
basket at one time. We used to all wonder कि इसका क्या relevance है. Uh, so, last question on this topic is, as a policymaker, what do you think is good strategy? Is it good strategy to give everything to the market and be done with it? Or is it better to keep, and you have been a market player. So I'm asking from, you know, मार्केट को स्पूक करे कि मार्केट को थोड़ा थर्स्टी ही रखे, प्यासे ही रखे कि आने वाला है एंड देन liquidity flows, everything is good. What is your view as a policy maker? What should be
So
the strategy?
this could be my personal opinion. जब तक कैरेट आगे रहेगा ना हम चलते रहेंगे.
Exactly. वही
कैरेट
बोल रहा
मुंह में आ गया तो फिर चलना रुक जाएगा. So it is always better to keep the carrot ahead. Market globally are buy on rumor, sell on fact.
absolutely
So we
absolutely
have to always give some hope to the market so that it continues to move.
And you have given the hope by saying that inflation 3 tak bhi aana chahiye. Okay, so then from here we go to the vex topic, and I'm involved with one market development exercise. You're aware with Harmony,
Yeah,
right?
yeah.
So on corporate bond side, and it's been interesting, and kind of culmination of many decades of us all trying to see how to improve corporate debt, corporate bonds market. So two questions. One is, what is your expectation on credit spreads? Because credit spreads do move in line with government bonds, but in your view, how realistic they are? Rating related kitna kya hai, and credit, should they narrow, should they widen? That is one question. And the second is, any two suggestions, because Even today, I'm sure you're scratching your head all the time how to get the corporate bond market to become more liquid and have more depth. So, any two suggestions which maybe we can take forward to the regulators or something like that, or have some more discussion on how to get it to be more liquid and have more depth.
So, Manoj bhai, one suggestion is rule of law. In debt market, return of principal is more important than return on principal. And we have seen even in cases like ILFS, Yes Bank, Divan Housing Finance, there is no calculation of when your money will come back and how much money will come back. वो तारीख पे तारीख तारीख पे तारीख तारीख पे तारीख में सब कुछ बंद हो जाता है. A debt market cannot take off unless until people can price the risk. Today, in absence of any clarity on the same, people price infinite risk, and hence, either you lend to
Yeah.
Tata or you don't lend to Batata. The second thing, for secondary market liquidity, you need to ensure that there is buyer and the seller. In India, we'll have buyers when interest rates are going down and sellers when interest rates are going up. But then you also need some counterparty. Now, can we create segmentation? For example, insurance pension will be long dated investors, but they will be carrying 3 months CP also, 1 year residual bond also, 3 year residual bond also. Can we not allow pension fund, PF fund to sell bonds which are of shorter maturities? Today we are saying that you can sell bonds only when they are downgraded. अरे भाई डाउनग्रेडिंग को छोड़िए छोटी मेच्योरिटी है बेचने दीजिए बिकॉज ऑल आर पेंशन इंश्योरेंस कंपनीज आर रनिंग शॉर्ट ALM.
Very true.
In insurance there is no restriction, but then still insurance companies don't come to sell short end bonds quite actively. So we need to give them confidence and comfort that by regulatory we are fine if you trade and try to make money. So we need to create a buyer and seller, active buyer and seller in the market. And we have to give them assurance that even if you go wrong, there is this kind of recovery possible in this time period so that you know what is your downside.
No, this is a very interesting point, and in that, we have an equity cult, let's say, with retail, huge retail participation in it via mutual funds or directly. But we don't have the same for debt. And actually, if you think about it, if you want to put aside money for retirement, there are very few avenues available. In fact, many of the mutual funds also, when you have to really look for long duration schemes, you find very few. And that also could be because at the issue time, people don't see appetite. No, the issuers don't see appetite. So ultimately, the stock of available, only the government has issued, right? The stock of long dated bonds as such is not there also because, again, same chicken and egg story, like you just said. You have to create interest as well. The other point used to be of countervailing interest, right? We used to always say that the biggest repositories of corporate debt or credit are the public sector banks and the insurers, largely LIC, right? But the point is, they don't have any incentive to dispose of or trade in that, right? And the guys who can trade, again, like you said, they are only, you know क्या कैसे बोलते हैं ना, when there is a bad situation or distress selling आता है, only then they want to buy. They will not buy during normal times. So I think that is a vexed issue, and what you've said makes sense. We probably need to follow up on that. What is your view on,
Encourage
yeah,
innovation. I mean, regulators have encouraged innovation. It's not that they haven't encouraged innovation, REIT, INVIT, uh, performing credit AIF. But the expectation from regulator is that there will be no accidents. अरे भाई आप ट्रैफिक बढ़ाएंगे तो एक्सीडेंट होंगे.
होने वाली.
You can't judge a regulator based on have they prevented accident.
Yeah.
You have to judge them on the basis of after accident have they cleaned up or not. Now
Yeah.
when the expectations are mismatched, the regulator is bound to be slow in controlling traffic. Lesser traffic means lesser accident. We need to create optimum traffic even if there is an accident, and that's how innovation can be sustained.
Another example is in one of my earlier, I won't name the bank, one of those employments, the credit manager, the guy who used to approve credit, used to claim, देखो मेरा zero bad debts record है. वो बोलता अरे it's very bad. तेरा अगर zero bad debts का record
हाँ
है,
मतलब तूने काम
it's
क्या
very
किया?
bad. हाँ. So anyway, that's another story. So let's move on. Let's move on to. I'll come to equities last. So we talk about FX. We've seen dollar INR move from 88 down to 83, now again over 86, a little bit mimicking FPI behavior, and which again mimic to a fairly great extent the geopolitical and economic upheavals during these last, let's say, 4, 5, 6 months. Uh, so, one is, what's your view going forward, short term and long term? Whether and what should we look at? What factors should the market look for to have a kind of view on how dollar INR is expected to behave?
So in the short to medium term, you have to figure out which hand RBI is dealing. While in sense our markets are free to move wherever it wants, it is always playing within the boundaries of the RBI. एंड बाउंड्री के बाहर जाते हैं तो बड़ा शॉक भी लगता है.
True.
So you have to figure out which boundaries are set by RBI and play accordingly. With $700 billion reserve, ability to go short in forward market to the extent of 70-80 billion dollar, there's no point in defying God. भगवान ने जो बाउंड्री बनाई है बस उसी में खेलो इन द शॉर्ट टू मीडियम टर्म.
Just on this note, one of the interactions with one of the deputy governors, very well known, I won't take the name, lady, I had said that you can't have the elephant in the room is here. You
Yes,
cannot, whatever you do is you have to look at that elephant in the room first. Sorry,
absolutely.
please go. Yeah.
And over longer term, I still feel Indian rupee will continue to depreciate. While we may even match global trade partners on inflation, the productivity differential continues to remain in favor of our trade partners. मतलब अपने यहाँ पे we have done lot of improvement in terms of power, port, telecom, but the process of ease of doing business, it remains restrictive. चाइना 7 दिन में अस्पताल बना सकता है, हम तो 7 दिन में अस्पताल का नाम भी नहीं रख पाएंगे. That productivity gap will ensure that Indian rupee will have to continue to depreciate. The extent of depreciation will come down. So in the short to medium term, find out RBI boundary and play according to that. Over longer term, please provide low single digit depreciation in rupee.
Just on one of the factors, like CAD is a factor. Trade largely influences how CAD ends up, but they have been stable and they have been fairly predictable for the last few years. One thing which is, I think you will have a far better grasp of it than I, is the FDI. FDI last year was considerably less than the previous, and one of the reasons attributed to that was a lot of the startups and smaller companies had foreign investors sell off and go away, so they had invested in venture form or whatever. So do you hear similar things, or do you think that story will remain similar going forward?
So मनोज भाई हम लोग है ना चक्रव्यूह बनाते नहीं हैं वेर आना इजी हो जाना थोड़ा मुश्किल हो या एक बार आ गए तो यहीं पर रुक गए. Now on paper obviously we have to show that we are open economy and anyone who comes in are free to take their money out. But let's learn from China. If you take money out of China, then you can't re-enter.
हाँ, सही बात है.
We have to ensure that legitimate capital has both way entry, two-way, in and out. But if you are just be a short-term trader in Indian market, then there has to be a penalty. For example, HFT traders are taking billions of dollars of money out. हम उनको क्यों अतिथि देवो भव कर रहे हैं? They are fair weather friend. जिस दिन पैसा नहीं बना भाग जाएंगे सबके सब. तो why are we allowing them to make money at the cost of retail Indians? Life उनकी थोड़ी difficult करो. Levy higher extent of tax on it. So we need to be little bit careful about which capital we are welcoming and which capital we are allowing to take profit. HFT capital should be discouraged, penalized, and taxed heavily. A pure foreign direct investment we should encourage.
Having said that, your point is very valid for pure FDI as well, because point is, if they have come in as FDI, they should not behave as traders, isn't it?
Yeah.
So udhar bhi, maybe, to be honest, I don't really know what is the definitions for, or restrictions on how long you need to remain invested if you're an FDI investor, etc. But maybe what you said is applicable to them too.
Manoj bhai, like if you are FPI and coming via Netherlands, South Korea, and France, you pay zero tax. If you are NRI coming out of Singapore, Dubai, and some other jurisdiction, you don't pay any tax. अब ये कैपिटल को हम क्यों टैक्स इंसेंटिव दे रहे हैं? Let there
Correct.
be a level playing field between domestic investor and global investor. At
Absolutely.
$700 billion, we don't need that money.
No, absolutely right. No, very valid point, and hopefully we get some action on your suggestion here. So
I'm
now,
ready to try.
lastly, coming to, I think, whatever you say normally you can talk in your sleep, right? Which is equity markets. So, so equity markets का question भी very similar है to FX, right? The behavior has been like, मैं तो मतलब old timer हूँ, तो I still track Sensex rather than Nifty. But 80, 84, 85,000 say down to 72, now again back to almost 83. So उसमें क्या लग रहा है, मतलब is it again similar factors as were influence USD INR, or do you think anything different, and what's your, how do you see equity markets moving in the coming weeks, months?
So our equity markets are like person having average normal temperature because one leg is in boiling hot water, other leg is in cold water. Domestically गाड़ी ठीक चल रही है, inflation is low, liquidity is high, rates are coming down, earnings growth is decent, GDP growth will be mid single digit, current account is under control, rupee is behaving nicely, long term growth story remains intact. Domestically there is pro growth message from the policy makers, so one can't complain. The only domestic complaint could be about valuation, but that's beauty in the eye of beholder. The challenge is on the global side. ट्रम्प साहब, डॉन को समझना मुश्किल ही नहीं, नामुमकिन। इसराइल ईरान कभी फिक्स मैच खेलते हैं, कभी नॉन फिक्स्ड मैच खेलते हैं, समझ में नहीं आता. So globally, undoubtedly, there is a lot of uncertainty, and that could create some adverse impact on our market. But even if those adverse impact come, the effect will be very, very limited because everyone wants to buy on bad news in India. There is HNI family office retail investors which are waiting to collect on the correction. There is FPI who will be willing to buy India in bad news like Operation Sindoor. So my feeling is that this is time where you just pick up some good entrepreneurs and bet upon them and stay invested. Don't try to jump from one place to another place or time the market. You'll end up missing the jungle for the wood.
No, that's a great point, and I have followed that religiously for the last 25 years. तो being a sensitive employee, वो तो आपके फंड में ही डाल के बैठे हैं. So I think great, and my major takeaway, I love that line about Don को समझना ही मुश्किल, because तारीख पे तारीख तो यूज कर रहे थे टैरिफ के लिए, but this is a new one, so बहुत अच्छा था. I think that's about it from me. I don't have any more questions. Is there anything else you would like to talk about, or say or tell us?
So, see, while everything looks good for India, Manoj bhai, we can't become complacent. We can't take growth for granted. There is major technological disruption coming globally. And we have 144 crore plus people whom we have to feed as well as provide jobs. Plus aspirations भी बहुत अलग हो गए हैं. Without gaining complacency, will have to be on our toes to pursue double digit growth. If we don't do anything and do what we are doing, will be mid single digit growth, but we should not be happy at that. All our policymakers and Indians should come together to create a decade of double digit growth that will change India in a far more meaningful manner than we can ever imagine.
No, I think that's a great message, and you're absolutely right. Jobless growth bolte hai, या low jobs growth. Unfortunately, we have leapfrogged the industrial economy, type of sector, and we have moved totally into service. But that's the reality. So whatever we can do on that side to provide jobs, particularly, and I think growth is the only answer. Grow, grow, grow. Otherwise, we lose out on the population dividend as well, right?
Absolutely.
So lovely, great. Thank you very much, Nilesh. Great
Thank
talking
you.
to you as usual.
Pleasure talking.
Loved having you here. And till next time.